Good afternoon, everyone. Brett Wisnowski, Security of National Mortgage Company here. NMLS number 1312912 for all of your compliance needs. Coming to you from my home office here in South Austin. Working safe, staying safe. Hope you all are as well. I'd like to welcome you to my weekly video series where I'll be talking about an array of different topics, all mortgage related or real estate related, of course. I'm certainly open to any suggestions on topics that you may want to hear about. If you'd like to better educate yourself or your clients, feel free to email those to me. I'll certainly make a list. I can't guarantee it'll be the very next week, but of course I can work on that for us and provide some useful videos that you can show to your clients to help explain certain scenarios if you'd like to do so. Anyhow, so again, as I mentioned, weekly video series. This is the first one. I'll give you a little bit of my background. 6-year mortgage veteran, or on my 6th year. I have seen a little bit of everything, so pretty well any situation you can think of, I've probably worked on it. I've worked on some pretty rare loans in terms of loan types. I've also worked on teams with extremely complicated self-employed borrowers. So that's been a lot of my most recent experience, and that's where I specialize, is really some of your more complex borrowers that have complicated taxes. I mean, something that really takes a lot of time to analyze and really takes a good skill set to be able to qualify or pre-approve. So anyhow, I'd love to speak to any of you if you have any questions for me directly. So today, what I want to talk about would be the advantageous market that we have opening up in 2021 in terms of mortgage-backed securities and what that means for us and our interest rates. So obviously, right now we're in a great interest rate environment. However, some days are better than others. So I will walk you through a few of my technical indicators that I look for before timing out and locking in our loans for our clients. Typically, there are key indicators that I look for, and then I compare to our rate sheets to see if the improvement is really there or if we need to float or what the case may be. And I think that this is something that a lot of lenders really lack knowledge in, and it's not really in their training or what they do. I mean, they're mortgage loan officers, they're salespeople. They focus on the sales. I kind of do both just because that's my hobby. So I'm a nerd. But anyway, I would like to walk you through these key indicators and show you where our market is right now. If you're on the fence, if your clients are on the fence, if you haven't refinanced yet, now is the time to do it. Simply speaking, the mortgage-backed securities prices are trading at near pandemic highs. So since lockdown in March, we are tied with or very, very close to what's called the resistance line for the highest price that a mortgage-backed security is closed at since the pandemic. So anyway, what that means to you and your clients is that when the mortgage-backed securities market is high, so i.e. the price is high, then your interest rates are generally going to be lower. So right now we have a very unique opportunity to possibly get the lowest rates we have seen yet. Even considering the 0.5 point Fannie and Freddie adverse market fee that's been added to every conventional refinance that goes to the investor. I believe that was effective for anything delivered November 30th and after to the investor. So now I want to walk you through some of those key indicators and talk to you a little bit about what to expect and why it's a great time to get yourself or your clients off the fence to refinance, purchase, whatever you're looking to do. Market as it sits today, starting in October all the way up to December 31st, 2020, our last day of trading. So in order to help you understand this a little bit better, I'm going to take us all the way back to January. So January, pre-COVID, at least in the United States, but of course COVID was already spreading and causing pandemic level mayhem across seas. So here we already see the market already kind of reacting to that. So anytime the price of the mortgage-backed security rises, generally speaking, the rates lower. So here we actually see some money being moved to mortgage-backed securities by investors, probably leaving the equities market in fear of volatility. So late January, early February, from the field level, the frontline level of the mortgage world, this is where I started to see significant rate improvement. So there was a lot of refinances already going on here in the last few weeks of January. So February came along, we lost some ground. I remember seeing that as well. Late February, we started really picking it up, and then March is where all the mayhem begins. So March, the open market was climbing rapidly, and then of course all these red indicators indicate that the price of mortgage-backed securities fell and closed lower than where it started. It started that day at, so where it opened that day. So anyhow, March. This is where a lot of craziness, a lot of volatility happened. The bottom of most major indexes. So that's going to be your S&P 500, your Dow Jones, NASDAQ Composite. The bottom of that was at March 23rd, so not quite the bottom here at the mortgage-backed securities market, but March 20th, so the Friday before, was. So anyhow, this is where a lot of hedging losses happened. This is where a lot of lenders, regardless of who the LO was, could not fund loans. They had hedging losses. They had margin calls. There was several lenders and investors that actually completely suspended jumbo loan products. And we were very, very fortunate at Security National Mortgage Company to not have that issue. We're backed by a life insurance company with billions of dollars in assets. We didn't have any issues here. A lot of people did. So we were still able to fund jumbo loans. We were still able to fund our own conforming loans and our FHAs, so on and so forth. However, as you can see here in March, once we dive, we start kind of rising back up again. And then you see the prices stabilize. And what happened here is that in March and April, the federal government purchased a total of $300 billion with a B in mortgage-backed securities. So what they did to do that, or the reason why they did that, was to drive the prices up, stabilize them, and lower the interest rates. Because, of course, anytime there's any kind of economic turmoil, lower interest rates typically help the economy heat back up. So that's what they were doing. They sprung right into action on this one. So quite a bit of foresight on their part. So anyhow, as you can see, since then there's been a nice upward trend. A couple spots of volatility. For the most part, we've trended upward, and we stayed fairly stable. Versus the price swings of March and in the beginning part of 2020 in general. So anyhow, lately this is where we have been. This is just late August all the way to December 31st. So what you're seeing here is a pretty stable rate environment for the most part. Typically speaking, whenever I have a good day where there's a lot of price improvements, such as this one I probably looked at, typically speaking, the further it goes up in price, I typically just watch our pricing sheets to see if there's any improvements, to see if I should lock, see if I should float, so on and so forth. So I pretty consistently check those throughout the day whenever we have a day that is showing quite a bit of pricing improvement. So anyway, here, so this is November. November was a pretty good month for mortgage-backed securities, as you can see. Ironically, on November 30th, which is actually the same day that Fannie Mae and Freddie Mac imposed a 0.5 point charge to the rate in what they call an adverse market fee for any refinance delivered to them from November or beyond November 30th. So this was the last day that you could deliver a loan to Fannie Mae and Freddie Mac without that 0.5 point charge. A lot of lenders built this into the rate, which we have as well. But honestly, it has not made much of a difference. It's really interesting. So anyway, on that day, we hit our pandemic high in price. Again, relatively speaking, the higher price, the lower the interest rates. So we hit resistance level 103.953 is what this red line means. And that is actually representing the high in mortgage-backed securities since the pandemic happened. So from there on out, in December, we saw a little bit of a fall in price, which is pretty typical after a spike, this significant. Anytime that I've been locking anybody recently, I've waited till pricing approached this resistance line and held steady long enough for rate sheets to update. So once that happens, then I typically just check those rates, check the sheets, see if there's any improvement, see what the market's doing, if it makes sense to float, if it makes sense to lock. So anyhow, we lost some ground here, but very, very quickly made it up at the end of December. I locked a lot of people in these 4 trading sessions here. But as you can see, resistance was broken at 103.7, which is actually the previous resistance level. And it was touched and then closed out at just shy of the pandemic high at 103.953. So what this means is that interest rates are relatively low compared to the rest of the year. And I think it's a fantastic time to take advantage. So what this means is if yourself or your clients are on the fence about refinancing, they're on the fence about purchasing, putting in offers, if they're on the fence about locking in, let's just say they're under contract, maybe not even with me, another lender. Right now is a time to lock in, and it's going to be very interesting to see what the markets do tomorrow. So I believe right now is the time to make those phone calls. If you have some clients that would like to refinance, let's just say if they want to pull some money out of their home, they want to do an equity loan, and they want to take that money and use it to purchase an investment property, or they want to take that money, do some home improvements, whatever. If you know of anyone, tell them right now's the time. Have them put in an application with me. I will lock that loan immediately once I have the necessary documentation, and I will move that along as quickly as possible as to not miss this opportunity. So anyway, if the prices fall tomorrow, we'll still see some pretty significant rate decreases relative to the rest of December. So that will be interesting to watch, and I'll be glad to help, happy to help. If you have any questions, feel free to call. I hope you enjoyed my explanation of the mortgage-backed securities market and how it is relevant to interest rates as a whole, as well as the things that I look for before locking in our loans. Now, there's several other things I didn't go into, such as oscillators, trend reversal patterns, things of that nature that I typically keep an eye on very sharply as well. But if you'd like me to explain further, feel free to reach out. I'll be glad to help you. I'll be glad to educate you or your clients. So certainly feel free to reach out. My email and number is at the bottom of the screen here. So I would also like to take this opportunity to say thank you to everyone who trusted me to work on their loan. Whether you referred someone to me, so you trusted me with your client, or if you were one of my clients directly and you trusted me with your refinance in the last few months, I really appreciate that. I've been doing this for quite a while, and I'm now a commissioned loan officer out on my own. And I take a lot of pride in my work. As most of you know, if you're watching this video, you've probably already worked with me at some point. And with this being a new endeavor, I would certainly appreciate any referrals, whether that be for your clients or other professionals in the real estate industry, a home builder, or the financial industries, would all be excellent sources for me to meet and get to know. And feel free to share my information if you think that they can benefit from the services that I provide, or if you think I did a fantastic job, certainly reach out and and make an introduction or send me their information. I'll be glad to talk to them. I hope you'll join me next week. We're going to talk about something else. I am open to suggestions. If you'd like to know anything, feel free to email me. I'll be glad to put those on a list, and we can make some videos about whatever topics you'd like to know about regarding mortgage financing or the real estate market in general. So I look forward to it. Thank you very much to everyone again, and I will see you next week.